Well, let's put my Forex strength sheet to the test, shall we?
Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I'm the big fella Scruff, with an over-obsession at coffee, but a love of the charts. And if that sounds good and you love the charts as well, do take a second to hit the subscribe button. Genuinely helps. We'll crack on. So what are we doing? Well, if I just flick this over, I shall tell you. Earlier on today, we were having a good chat in the morning call, and my sheet has pulled out Euro JPY. I've done the breakdown for them here. And in the morning call, what that is, it's where we actually look at different subjects each day. And today was Winning Wednesday, and within it, we discuss certain parts of, well, let's just call it the anatomy of a trade. And one of the subjects was about being patient and know when to quit and all of that sort of thing. And I can't stress that enough. I've been paid royally well today, and I'll show you that in just a second. I don't need to do this, but I do feel I have to back this up for the guys. It's kind of my point of difference. I'll trade it in the moment, and as you've just seen, they already know what I'm about to do. I can't be any fairer than that. Now, when I talk about strength sheet, what I'm looking at is this. Now, this strength sheet actually helps me dictate which products I'm going to look at and whether there's any good movement in it. Now, the first thing I look at is this top section here to see if there's anything in it. Now, there's none of them particularly good because it would shine up in there if it was. But if it puts in an anchor chart, in other words, a chart to look at, that means it's something worthwhile. Right, so it's Euro JPY. I'll then look to see if that's in the market pick. Well, if it is, that takes precedence. In other words, it'll be the first one I look at. And there it is there, Euro JPY. So let's look at this, shall we? Well, there's the Euro. It's pretty darn strong. There's JPY. It's not very clever. So it's losing ground. Okay. Then we're looking to see if there's any change of strength from the last data sample. Well, the Euro's gained 9 points, but JP's minus 16. So again, it's telling me there's movement, and it's movement that can be pushing the Euro to the stronger position. So that's roughly what I use this for. And actually, bollocks, I've just missed the entry. It's there. Okay. So let me just drop an order into this very quickly. And I'm going to trail it backwards. Okay, there we go. Now I'm going to target up into the next section, which is up here. Now I can take it up into this as well, there. But what I'm wanting to do is I'm going to stage this backwards down into here. In other words, get a better price and work the waves. Very, very simple. Should have been in on this blue line. That was the better option. Okay. And that is tight. It's really tight into this barrier. And it's something that I was talking to Bunter about in the morning call. But I have a dominant direction to the upper side. And I'm kind of expecting that level to burst. It's marked with red zones as an entry point. So what I'm going to do is I'll trade it back into this. I'll be very careful here, and then we'll move up. But I'll break the trade down in just a second. Okay, I just want to make certain that I've got this reasonably right. One of the things with doing a YouTube channel like this is sometimes you kind of miss something when you're trying to explain, which is what's happened there. What I'll say about this channel is everything is unscripted and it's in the moment. I don't do retrospective or anything like that. What you see is what you get. And the guys in the squad already know this because I've already told them. And in fact, if I just flick that back over, if we go to Scruffy bias at 10 to 9, it's currently 20 past 9, so half an hour ago they saw this. Okay, and what this is, it's telling me the product I'm looking at in this hour, so 9 o'clock. It's telling me to buy it. It's telling me which chart to monitor, which is the hourly. And it's telling me it's quite a good, but at the time it was telling me to wait, which is kind of why I'm waiting to now. I needed to see some better conditions. And those conditions were to see the end of that pull and then push back through. Okay, which is why I should have had my order sitting here, and then we would have been sitting in profit. So I'm a little bit behind the game here. It's not end of the world stuff. It's all doable. We can survive that. But let us work this out. So where did it come from? Well, if we look at the daily, we'll just push this daily out. We can see there was a colossal drop here, a good range, and it's broke the top of the range there. So from that point, it'll then start looking to flush levels. Well, let's flush this level, this one. It's already had a go at that one, which came here, but it didn't come to the high. Okay, if it hasn't come to the high and the pressure is still to the upper side, it'll go back to have another go at it. And if it is, it'll attempt to get to this one. And if it bursts through that one, it'll attempt to get here. Easy diagnosis on this chart. Take it to a 4 hour. Well, you can see the pressure pushing up. Green surges, shallow pullbacks, green surges. That's quite a steep pullback, but green surges. Relatively shallow. Green surge, shallow surge. Take us back up. Okay, so the premise is still to the upper side, and all we're doing is we're going from one level to the next level and then looking for logical entry and exit points on the way in. The hour. Now this is the anchor chart. This is where the idea comes from. Now if we look at this, colossal drop, run out of steam, now it's building back up. All green, very little red, showing signs this way. Even that drop there is pushed down. Look at the tail. The pressure is pushing it back up. So this could be just profit taking. So what can we do with this? Well, I've already got my entry exits in, but what we can do is just to highlight something for you guys. If you take a fib from the lowest point to the highest point, you can see what it's trying to do. Well, it's come down. Look where that 30 is. That 38 is marrying up with that, which is a strong level from further in the chart. And what did the price do? It stalled bang on it. So the fib is highlighting another level, which is telling you which is strong. It was there. So, all right, I've got in a bit late, but the ticker's working. It's pushing up. If I'd hit that, I would have hardly had any drawdown. But I'm willing to go down to here. But at the moment, we're just wait and see. Now, this is the only trade that I've got running. We've got no orders running. And that's my work over the last 2 days. Now, this morning I was up early. I did the DAX. Got it caught. Most of that's going to go to St. Cuthbert's. And why? Well, because it's a nice thing to do. And it's something that I support. Whenever you buy my sheets or anything like that, that's where the money goes. So I do it on purpose. So, where are we at? Sorry guys, I'm trying to watch 2 screens at once as well. Because like I said, this is a working chart. This is me doing my job. But what we're doing is we're going to be going from here up to here. What we can do is we could even push it up onto that blue one there. Because if you're looking at this, that doesn't really have that far to go, does it? Not in the grand scheme of things. In fact, here's a good tip. Say you're looking at a chart like this, and it's something we were discussing, and you're working a 5 minute. What does the 5 minute really tell you? It can tell you a lot, but what you can use it for is a good entry. you can look to see, fine tune into where you want to get into the market. You could even take it down as far as a minute. Not to read the chart, not to do anything with the chart, but just to see how the chart's performing and fine tune your entry to get in nice. Okay. But what happens when you're on a 1 minute chart? Well, the candles are flicking from side to side like a yo-yo. In other words, they're going red, they're going green, they're going red, they're going green. And you can spook yourself out of a good trade. However, once you're in the trade, if you go up to there, that ain't hardly going to move. And if you're looking at a bigger target, well, that looks a lot easier to get to just here. So psychology will tell you that's a nice simple target to reach. All right. Well, it's only got to go there. That's maybe it's an hour, 2 hours. Hit my target. And what would I get? I get £159. Well, the £159 added into that lot. Well, there you go. That creates a nice wage. But if I was looking at that, and now I'm thinking, shit, I've got to get through this. Well, that's a long way to go. What if it gets here? Oh, no, I don't think it's going to go much higher. I'll pull the plug. Well, then that's not much money at all. Because you're looking at this thinking that's a mammoth distance to go. And you'll see this going green, red, green, red, green, red. Spook you out. Go to the hourly. Not so much. And that's why it's important that you look for an anchor chart and an analyst chart. Now, an anchor chart is where you spend most of your time. You figure it out. You look at it. And you think, right, this is the idea. That's going up. Well, that's my play. I'm going up. And that's it. So we'll run this out and I'll come back to you at the end. Okay, guys, finally stopped out. Just been working the chart, moving from one area to the next, then from this area into here, this area into here. The overall goal was to run up here. However, it's come down and it's stopped me out. Am I worried? No, not really. It's done exactly what I wanted to do. It's paid me reasonably well. I'll rephrase that. I've been paid reasonably well today. This was just a top up. And there you go. All executed just as I said. And it's whacked that up to, would have been nice to be at 1,500 quid, wouldn't it? But I can live with 1487. I genuinely can. So that's my rolling target. All of this was put into the Discord before I was doing it and I was talking about it. And if they ask me questions, I'll go through it. And the idea is just to be well, methodical as I can. And that's the key thing. You just go systematic. Right, I'm going from here to here. Am I going to size appropriately? Yes, because one of the things that I notice, it's brilliant putting on the big accounts, you know, and you see these massive position sizes. I could go into this at easily £10 a point or one full lot. The problem is, if it goes against me, those figures rack up really quick, and then I have to start cutting trades and basically giving money away. I'd rather go in smaller and build into it and just carve left, right and centre as you see me. It's one move because I'm just going from one position to the next position. So it's a single trade and then I'm working the waves inside it. So to me, it's just one trade. It's not like scalping if you call it that. It's just working the chart correctly. Hope it helps. Showed you that from start to finish. If you're interested in it, by all means, drop your comments below. I answer every single one. And I really enjoy the engagement. So send me an email. My WhatsApp, etc. is in the description, or I'll drop it in the comments. I'll put a big blurb in the comments so it's easy to find. And come along. Trading ain't that hard, guys. It really isn't. The hard part is you. It's what's up here. It's the mental side of it. And when you get dazzled by the figures and one thing and another and you think, well, why can't I do that? You can do that. It's just the difference between a big account and a small account. But like most things, little acorns can grow into great big oak trees. Happy days. So there we go. End of another good trade. Quite happy with that. Now going to go about and enjoy my day. Life's good. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.